Hi folks, Lee Gettess here with the Market Sense for the week of August 30th, 2016. We're going to look at charts that come from Gettess Trade Navigator software. And the first chart is weekly bond market, and you can see they haven't done much in a couple of months here. It's a little frustrating and difficult to know what to say or do about it. It's also not unusual. The financial markets often get rather dull in late summer, and they're looking for something to kick them off. Are you listening, Janet Yellen? What we were looking for this week is perhaps a move down here into the 168 area, down here by the projected low and the mid-Keltner channel. We didn't get that though. They just started up immediately and went up here to the 170.12 to 25 area, which was kind of the upside target. Now that may mean they're going to turn and head back down to 168 from here, but it could also mean that they're just on their way up to the upper moving average here around 172. And there's a third possibility, of course, they're done. This is all we're going to get for the week. I'd like to point something out here. We use a momentum indicator here, which is a moving average of an RSI. And since this sideways pattern began, the RSI has remained below its moving average. Now that's an indication that the momentum is actually weaker than the sideways patterns would suggest. So that increases the chances of breaking down out of this. Now if they get a good strong turn up and close above this moving average, or especially above these highs here, well, that'll change this, and this indicator will be pointing way up here and it'll look strong again. But for now, it's warning that yeah, we're sideways, but the momentum is actually lower. In stocks, we also have rather quiet sideways pattern here. Heck, last week didn't even make 35 points, and it's an outside week, so that ought to tell you how exciting things are. What we've had so far is we were kind of hoping to see them after the big down week. Yeah, big down week relatively last week. We were kind of hoping to see them go down at least to take out that low and possibly down to test the 2150 area. Again, they didn't. They kind of opened higher and stayed there and just started up. We had resistance here around 2177, which they have been through, but they're not closing significantly above it. They're kind of screwing around. So, they could be strong enough to head up to the 2190 area here. That's a distinct possibility. And it's also possible that they will drop back down here at some point. Less inclined to buy them if they do now, since they've already been up to this middle moving average, because that was kind of going to be our target if we were able to buy them down here. We have employment data coming out at the end of the week. I'm not sure it matters, since the Fed's already suggested that they think we're near full employment. That's apparently not what they're focusing on to decide when to raise rates. So I think that's all the market cares about. But you never know. You might get a shock from one of the numbers. Yeah, so that's what we've got for you today. I hope you can find something profitable to get yourself involved with.